Imagine going to your bank to withdraw your own money, not someone else's, yours. And the teller looks at you calmly and says, "No," not because the account is empty, not because you did anything wrong. Just no. That's what happened in Lebanon. Not to a few people, to almost everyone. And the worst part? Nothing looked broken. The doors opened. The ATMs worked. Your balance didn't change. The money just wasn't available. The Switzerland of the Middle East. For most of the 20th century, Lebanon had a reputation. Beirut was called the Paris of the Middle East, the Switzerland of the Arab world. Banks lined entire streets like temples. High returns, stability, discretion. After the Civil War that ended in 1990, Lebanon rebuilt fast. Downtown Beirut rose from rubble. Foreign investment came back, and the banking sector grew enormous. By the 2010s, Lebanon's banking assets were nearly 4 times the size of its entire economy. 4 times. That's not a healthy financial sector. That's an economy that is its banking sector. How the system really worked. The central bank made a promise. $1 for 1,507 Lebanese pounds. Fixed. Stable. Forever. To keep that promise, Lebanon needed a constant flow of dollars. And to attract those dollars, banks offered interest rates that seemed too good to be true. Sometimes 10, 15, even 20% on dollar deposits. Where did the money to pay those rates come from? New deposits. Banks were lending billions to the government, and the government wasn't investing it to grow the economy. It was using it to cover its deficits, year after year, paying interest on old loans with new borrowed money. And as long as money kept coming in, the system worked. Until it didn't. This wasn't a banking system. It was a confidence machine. The break. By 2019, the inflow of dollars had slowed dramatically. Gulf states pulled back. Tourism dropped. The diaspora sent less. Lebanon was spending more than half of its tax revenue just to pay interest on its debt. Not roads, not schools, just servicing old promises. Then came October 2019. The trigger, almost absurdly, was a proposed tax on WhatsApp calls. People poured into the streets. But it wasn't about WhatsApp. It was about everything. The corruption, the electricity cuts, the decades of mismanagement by the same political families who had run the country since the Civil War. And then the dangerous questions started spreading. What if the banks don't actually have the money? The quiet bank run. So people went to withdraw it. The banks didn't collapse. They paused, closed for days, then weeks. And when they reopened, everything had quietly changed. No law was passed, no court order, no formal announcement. The banks simply decided. Withdrawals were capped. First quietly, then permanently. You could still see your balance on the screen. You just couldn't access it. Money that exists but doesn't. What you could withdraw came out not in dollars, but in Lebanese pounds, at an artificial exchange rate, far below real value. People started calling them lollars, a dollar trapped inside the Lebanese banking system. Technically there, legally yours, practically gone. If you have $100,000 in savings, you might be allowed to withdraw the equivalent of $200 a month from your own savings. And while those lollars sat there losing value, the currency itself was collapsing. From 1,500 pounds per dollar in 2019 to 10,000, then 30,000, eventually over 100,000 by 2023. A loss of more than 95% of purchasing power. Prices for food, fuel, and medicine exploded. A country that had prided itself on its standard of living suddenly couldn't keep hospital generators running. This wasn't just a banking crisis. It was a complete economic breakdown, happening in slow motion, in a country where the banks were still technically open. The explosion. And then, in August 2020, Beirut exploded. Over 2,700 tons of ammonium nitrate, sitting in a port warehouse for 6 years. Unsafely stored. Known about. Ignored. The blast killed over 200 people and destroyed entire neighborhoods. It wasn't just a tragedy. It was a symbol of negligence, of corruption, of a system that worked for the people running it and failed everyone else. International aid came, but most of it deliberately bypassed the Lebanese government because no one trusted it to distribute the money honestly. That distrust wasn't paranoia. It was pattern recognition. Who really paid and who didn't. The banks didn't fully fail. The system didn't reset. Many of the politicians who oversaw this disaster remained in office. And in the months before the restrictions began, billions of dollars had quietly left the country, transferred by those with connections, politicians, bank insiders, business elites who knew what was coming. The ordinary people, teachers, nurses, shopkeepers, immigrants who had spent decades sending money home. They were the ones left behind, their savings locked, their futures frozen. Not because of a war, not because of natural disaster, because the people who controlled the system protected themselves first. They didn't lose the system. They were the system. The lesson. Lebanon shows us something uncomfortable. A banking system doesn't need to run out of money to fail. It just needs to lose trust, because money isn't just paper or numbers on a screen. It's a promise. And in Lebanon, that promise was broken deliberately, gradually, and for years by the people who were supposed to protect it. If you opened your banking app right now, you'd assume something simple, that the number you see is yours, that you can access it, that it belongs to you. Lebanon is what happens when those assumptions stop being true. Not all at once, but slowly enough that by the time you realize, it's already too late, and nothing ever looked broken. If you want more stories about how systems quietly break, like and subscribe. The next one might already be happening.